Dive into the market reaction to coronavirus and to all that you've been hearing about this stimulus. With us to discuss is Peter Tchir. He's Academy Securities Head of Macro Strategy. We also want to reintroduce our panel for the next hour. Yahoo Finance's Emily McCormick and Jared Blickery. Peter, it's great to see you. So as we see this stimulus coming from the UK, I believe, alone in terms of its coordination with monetary and fiscal stimulus, are we going to see that have to happen in other places? And then what effect is that going to have on markets?
Yeah, I think we need to see it. I think we need to see it out of Europe, and we also really need to see it out of the U.S. I don't think monetary policy is going to be enough, and I don't think fiscal policy that isn't aggressive is going to be enough. One of the reasons we started selling off again today, Mnuchin went out and really talked about this as being a liquidity issue. I think it's beyond that, and we really need to solve for the demand shock that the coronavirus is creating.
When you talk about solving for that demand shock, are you looking for the kind of stimulus that's being bantered around, some kind of what we got the last time? We got the check from the IRS, or maybe postpone tax deadline April 15th? Or are you looking for Congress with some kind of maybe $300 to $500 billion injection? Because they do not move fast on Capitol Hill.
Correct. I think we need one immediate injection into the healthcare system, right? Make sure we're spending on healthcare, make sure there's enough money there. I think that's step one. I also want to see some regulatory backup, and we're starting to hear that, right? Gilead is being able to test some of their drugs under kind of more emergency circumstances. I think those are the right sort of steps. I do think we should get some sort of tax cut. To me, what I'm really looking for, though, is some way to make sure that we can get lending into small businesses. I think small businesses are most at risk here. And the other part that we could have a once-in-a-lifetime maybe opportunity is really fund people to bring their supply chains back to the U.S.
Peter, I want to pivot a little bit and talk about corporate earnings, because right now we haven't necessarily seen those expectations come down, particularly for Q2, Q3, and now as this coronavirus outbreak continues to spread, we're starting to think that this might actually spread into these next quarters. So, when do we start to see analysts be able to assess the potential damage, and what, degree of decline in earnings would be expected and attributable to this outbreak?
I think it's going to take another few weeks for us to figure this out, right? We're just starting to see all these closures go on in terms of schools and businesses trying to redirect people. I think we need to get a sense of, A, how deep those are, what that actually does to the economy, and how long that's going to last. And I do think, though, you are starting to see some rational, right? I know you just in the earlier segment talked about the energy businesses getting hit, travel businesses. I think you're seeing, though, some of the tech companies weather the storm a lot better. Partly, if we are moving towards more of a remote working environment, the tech companies should do well. And let's not forget, they are mostly sitting on a lot of cash that can be used for share repurchases. So I much prefer the tech sector right now at these stages, and I want to see clear signs from the U.S. government before I'm willing to kind of venture into the more risky areas right now.
Hey, Peter, it's Jared Blickery. I want to ask you about the bond market. We've seen U.S. Treasury volatility just go crazy, although the MOVE index is coming down right now. How much of is this impacting corporate issuers, both in the IG space and high yield?
Yeah, first, I've never seen liquidity like we are seeing it now in the bond market. It's literally non-existent in the Treasury market, where things would trade typically in a quarter tick, which is a fraction of a 32nd. You're now seeing half-tick sort of market. So liquidity is abysmal, and that's in the quote-unquote on-the-run treasuries, the 5-year, the 10-year, the 30-year. The off-the-run is even worse. So I think we've lost a lot of liquidity, probably blame Volcker rule and some other rules that I think were misplaced to begin with. But that has created so much volatility in the treasury market, it's very hard to get corporate things done. A couple companies came yesterday. The encouraging part is the coupons they got were the lowest coupons you're seeing on record for corporate bonds. So I think if any amount of stability, you are going to see a lot of investment-grade issuance because they want to take advantage of these low yields. And again, that will be good for them because that will reduce their interest carry charges.
So, Peter, what's the feedback loop then going to be for stocks here as we see maybe a little bit of a creaking open of the corporate debt market, but not much as you paint it? Are we going to go into a bear market here, and what does that scenario look like for investors?
I don't think we are. One thing that, people talk about how rapidly spreads have widened, and this has been one of the biggest gaps we've seen, either European financial crisis or even our own. I think the market is very different, right? We've gone back to many of the holders are buy and hold. So I don't think we're seeing that forced selling pressure. So I think with a couple days of sustained markets, prices, and stability, we can do okay. We need to see these new issues come because I do think there will be a lot of new issuance. That has to get digested. But from there, I think we're fine. Again, we're talking potentially 1/4 of an earnings hit, and we're not even sure if that happens yet. So I think it's way too premature to be talking about recession or any sort of corporate credit issues. I'd continue to avoid some of the single B credits if you're looking at that. But having said that, I put some money into the high yield market and to tech earlier this week.
Peter Tchir will be checking back in with you to see what you continue to do. Academy Securities Head of Macro Strategy. Thanks
you. For having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.